Something is happening in the markets right now, folks. The dollar is up, gold is up, and just Friday, markets tumbled on jobs data that showed that more jobs were available, so fewer cuts in the future. These patterns haven't lined up like this in over 100 years. Let me show you the four main ways these numbers are not adding up to retirement security and why you should proceed with caution, folks. Let's take a look at the dollar. It's actually up 9% since the first rate cut. That's the red arrow on the chart. Normally, when rates drop, the dollar gets weaker, but not this time. It's doing exactly the opposite. Even more unusual is what's happening in the gold market. Gold is up 5% during that same period. Gold and the dollar usually move in opposite directions like a seesaw. When one goes up, the other goes down. But right now, they're both climbing together. Look at what's going on in China, folks. China is entering into the same type of economic conditions we had here in 2008. Their bond yields are going down quickly. Their property market is struggling. Their banking system is under stress. Their economy is showing serious long-term warning signs of, at best, recession, maybe even worse. Japan is not in much better shape. They've had 30 years of low markets and low rates under 1%. Their rates are now climbing above 1%, but they aren't seeing any growth in their economy. This is what is called stagflation, folks. The economy is not growing, but both inflation and their interest rates are going up. For people like us interested in retirement, this is exactly what we do not want to see. Here's what's going on in America. We all know the Fed started in September. But during that time, the Treasury has gone up by over 100 basis points. That's 1%. The Fed is cutting rates, but Treasuries keep climbing. That means the market is fighting against those rate cuts because the market knows that we still have inflation. This is like the bank announcing lower mortgage rates, but your monthly payment goes up instead. And to make matters worse, just Friday, our markets tumbled on good job news because that means even fewer rate cuts ahead and likely more inflation in our future. This is not normal market behavior. If we take a look at the long-term history of the market, this goes back 122 years, you will see that we have typically had market cycles of 15 to 20 years. Markets go up, then markets stagnate and go sideways for a long period of time. We all remember what happened in 2000 to 2009, right? But look at this. From 1929 to 1949, investors saw zero returns for 20 years. Then again, 1966 through 82. And then we were lucky to only have one lost decade in 2000 through 2009 because the Fed intervened so strongly. Do you think they can do it again if things go against you in your retirement? The average bear market, folks, lasts 15 years. That's 15 years of going nowhere at a time when you are withdrawing money. Now, is it already starting? We don't know yet. One day does not a trend make, right? But jobs data suggested we should have fewer rate cuts in 2025 than was already prescribed. These unusual patterns are warning signs of a bigger market losses ahead. For retirees, This is especially concerning because you are taking money out, not adding to the markets like you did during your working years. Fortunately, there are ways to protect your retirement from these market uncertainties. We've created a special recession preparation checklist that you can download right now. It's free and there's no obligation. Just come to canonfg.com/recession. Don't let your 401k become a 201k. Visit canonfg.com or scan the QR code on your screen to schedule a free review. You know, it's all very simple. We look at where you are, where you want to go, and then if you think that we can help you with the work we do, we can talk about the next steps. At Cannon Financial Group, we can help you make money whether the markets go up, down, or sideways. And if you schedule an appointment, I will send you a copy of this book, A Concise Guide to Taxes in Retirement by Bruce Larson. Bruce is an agent with the IRS. That is the type of person your CPA tells you to hire if you're going to audit and they think you're going to lose. This book has helped thousands of retirees get the most they can out of every dollar they have saved and let the IRS chip in along the way. I want you to remember this is Charles Cannon, Certified Financial Planner. Lifetime income is the most important part of your retirement. Make it a great day out there now.